Hey everyone, welcome to a new video here, Sublime Traders. I'm Logical Orange, and in this video we are going to take a look at the recent market dump led by Bitcoin, and we are going to try to establish why it basically stopped at 30k and what can happen from now on. So without further ado, let's go to the chart. So we have this part right here. So if we measure it, we get let's measure from the top down. So we get about 40% from the neckline of this formation right here. So what happened here was a lot of uncertainty, and the market was basically pushed downwards, was pushed below the 200 EMA that we have here on the daily. I'm on the daily chart. And basically, well, it went all the way down here. But why? So I tried to analyze this from multiple perspectives, and I came up to this conclusion. So basically the market moved a bit like this, so it correlates. Basically it took the distance from the neckline to the high it had and went back to this level. Now it also is interesting because it is a support line for Bitcoin. So this level right here, the 30k, is also a support line for Bitcoin. Now, okay, you would have said you could have predicted this. Well, yes and no. It's kind of difficult to predict stuff like this because, well, it was led by news and then followed by the technicals. Okay, the order book was chaotic. We had buy orders that basically disappeared from the order book, more or less like wash trading, and well, yeah, then we broke down below the 200 EMA and we went back to this level. Now there are some people who got some entries here around this level right here. I'm just going to mark it. So there are some people who have some entries right here. Perfect. You are now in profit. Let's say you are like 27% in profit. Now I also entered around this area right here, not on Bitcoin, but on coins that follow it. Basically every coin follows it right now. However, we should exit somewhere around the 40k level. So somewhere around this would be a good potential exit for those that went in around 30k, 32k, somewhere like this. Okay, so we should take profits here and wait a bit. The people that didn't enter yet, well, the answer, you shouldn't do anything right now. You should wait, because I personally expect another dump. So I know that you guys don't want to hear this, but there is a possibility of another dump. I think that Bitcoin isn't done yet for the dumpage, and I think that the next possible level, the level where I will enter with every asset I have, like every stable coin available, the level where I will buy with two hands and my 2 feet, and everywhere I will use every asset available, would be the 20k level. 20k level, extremely important support. It was a resistance, but now it is a support. I think that the price can do something like this or turn, or another possibility will be this and turn. So just reject on the neckline. However, the possibilities for the upside right now are extremely limited. So we either have some rejection on the 40k level, or a rejection on the ascending trend line, so the neckline of the previous formation. Okay, either way, I personally think that it will end in another dump that would go somewhere around this level. And now from this level, yes, it can go up, and it can go up like it usually does. It goes up in stairs. So you see that we go up in stairs and we go back, we dump with the elevator. Stairs up, elevator down. So yeah, from here it can continue somewhere, like this. So possibilities for longs are extremely limited now, guys. Extreme attention to your futures. I personally don't trade any futures at all right now. If you want to short, use extreme caution. Shorting can be a possibility, but use extreme caution, and you can also prefer margin trading, even if it's lower leverage. You can do that also. It's lower risk than futures. Okay, so what I wanted to say is that I expect the market to continue. Also, we have had a nice rejection week here. I agree with this, and it usually says that the market will continue, will revert. However, we have the EMA to break and the previous candle to defeat. So unless we have, like today, because I am on the daily, a candle that covers the previous candle right here, so like an engulfing candle, we are not sure that we can break the levels that we have on the upside, and we have a lot of levels. We have a lot of levels to break on the upside. I don't have the Fibonacci traced on this chart because it would clutter the chart, and I wanted to base this analysis on simple things. So I think that the previous rejection candle was okay, but this one I would have expected a more bursty candle, a more bursty green candle, that would confirm a good momentum to the upside. However, it's not the case. So I personally think that it might try, so the market might try the following days to reach to this level, so around 43k. Basically, this whole area should be your exit if you entered around the 30k, 31k, 32k level. Okay, so this should be enough for you. Anywhere here is okay to exit. Now, as I said, my perfect entry for this formation would be around this level, so 20k level right here, support area, extremely important. I will say this multiple times on the group, and if you ask me in private, this is for me the most important level where I will buy. So this is what I would like to have as an entry. However, we don't know if the market will allow it to go that far. I think we can, based on multiple factors. Also, the EMAs are crossed down. This is also an aspect that helps me decide that the market is still going to dump. So yeah, basically these two levels are important for entries, the 30k, the 20k. If we hit that again on the way down, you can re-enter, no problem. In the end, if you have another entry here, your average entry would be somewhere around the middle, so 25k. And in the end, it will pay because the price will go up eventually. So yeah, this is all for today's analysis. As usual, if you guys have questions, don't hesitate to contact me in private or on the VIP chat. This is all, and thank you for watching. Have a nice day.